Okay, what's happening in BC's residential real estate market? A lot of people have been waiting on the sidelines because of Donald Trump's potential tariffs. Well, how does that actually affect BC's real estate market? Let's talk about it. Firstly, I don't think the tariffs are going to come in. I think this is a negotiating tactic for him to get the Keystone Pipeline Phase 4, the expansion, put through. Remember, Barack Obama canceled that pipeline expansion, and then Trump got in and he put the permits through. They built like 8%, and then Biden got in, and one of the very first things that he did, executive order to cancel that pipeline. So that pipeline brings Canadian crude all the way down to Houston, Texas. If they do expand it, it'll be 1.1 million barrels per day that's going to come down from Canada. That's going to get energy security for the US, and that's what Donald Trump is after. He doesn't want to be buying oil from the Middle East or South America. He wants kind of a North American independent energy. That's his goal. I think that's what they're pushing for. Remember, the federal Liberals brought in C-69, which canceled the pipelines. It was basically the anti-pipeline bill, which was then, that was in 2019, and then in 2023, the Supreme Court of Canada overruled that, so they got rid of that. It was infringing on the rights of the provinces to get their products to market, so it was deemed unconstitutional. So we have a government currently in Canada that doesn't like pipelines. We've got the Americans that want pipelines. Well, guess what they're doing? They're threatening us with tariffs, and I think that's why. So if that's the case, I don't think tariffs will come in. But if they do, let's talk about what that looks like in the residential real estate market here. Firstly, tariffs will get implemented. Canada will do retaliatory tariffs as well. And then we're going to have this little trade war. What does that do to our economy? It's going to send us into a nosedive. We're going to have the worst recession we've had since 1992. Everything's going to go down. Employment's going to go up. Not going to be a good situation. So what does the Bank of Canada do in order to respond to that? Well, they're going to reduce rates. So right now we're sitting at 3%. Without the tariffs, they were expected to gradually reduce the rates to 2.25% over the course of this coming year. This would be put on steroids, and they'd have to bring that number down to 1.5%, rapidly bringing down that cost of borrowing to give confidence to buyers to buy, which would then spur on the economy locally. So without the Bank of Canada, we're going to be in a real sticky situation. So they'll have to bring those rates down. Then you say, well, that will lower the Canadian dollar and increase inflation. And you'd be right. That's exactly what it's going to do. But that's the lesser of the two evils. And the Bank of Canada wants to keep people working in Canada before they're worried about that. That is going to probably happen if the tariffs do come in. So the buyers will then be able to buy more house with less money. So the buyers will have confidence entering into the market. And remember, right now, we're down 40% for sales to active ratio over our 10-year average. So there's a lot of pressure building up on the sidelines with people getting married, divorced, having more children. There's always a need why people have to move, have to upgrade, have to downgrade. That happens all the time. They're not transacting right now. They're waiting. So that's pressure that's building up on the sidelines. Our sales to active ratio is down. Inventory is up. So it's a great time for a prospective buyer to be out there looking at different options because there's more to look at and less buyers to compete with. So right now is a really good time to buy. If the tariffs come in, those rates go way down, buyers enter the market, and that's going to jack up the prices and the competition. Remember, the tariffs are going to make it more expensive to build. We already have a building shortage in Canada. So now the builders and developers are going to shelve projects because they can't make a profit anymore. So what does that do? That, again, restricts the supply. So there's going to be less supply to choose from, and more people will have to go, instead of new, will have to go into the used residential product. So again, that'll bring more pressure and more competition. I believe right now is like pre-COVID time to buy, where everyone's like, oh man, you're buying like right before COVID, what a mistake. And it turned out to be like the best thing you could have done because prices went through the roof. I'm really bullish on houses. I think houses are going to separate themselves from townhouses and apartments. I think apartments, especially like Toronto, Vancouver, are oversaturated, but you're gonna see more and more demand for houses, and they're not building more houses because there's no room and it's not affordable to do a housing development. You'll never see it in our lifetime in Vancouver, and that's starting to spread out. So houses in the valley are going to separate themselves from townhouses and apartments as far as value. So that's kind of what I expect to see. So if tariffs come in, prices are going to go up on houses because the Bank of Canada will have to reduce rates to keep the economy going. And if they don't, the Bank of Canada is going to slowly reduce rates through the year because they want to have a strong economy. We've already dealt with inflation. Inflation's at 2%. So now we can start getting the economy going because our production levels are really low in Canada. So anyways, that's what's going to happen. In a nutshell, I'm Merrick, signing off. Toodles. You get the toodles.